Hey everybody, it's Greg Gossett from Gossett Trading and Mentoring Live. Today is Tuesday, November 26, 2019, and we are again in the final hour of the market. As I mention each day, I like to make the majority of my buying and selling decisions just as close to the close of the market as I can. During the day, you have the day traders, you have the algorithms, you have a lot of noise. At the end of the day, particularly in the last hour and particularly in the last 5 minutes, the large financial institutions come in, the market makers come in with size and move the market to what, in my opinion, they think is the most valid price of the day. You have the most money at stake, you have the most well-informed firms and large financial institutions moving the price to what I think is the most valid price of the day. And that is why I like to make the majority of my buying and selling decisions right there, right before the end of the day. Plus, it frees up your day. You don't have to sit in front of your computer all the time and just watch a lot of random noise and craziness. And so I think it's a good approach to trading, and that's why I like to do it this way. So anyway, we are having a pretty good day. Dow's up 30 points, up 0.12%. Nasdaq's up 14, up 0.17, and the S&P is up 3 points. So, not a big day like yesterday, although we're doing really great today, I'm really happy to say. So anyway, let's take a look. Hey, Evan, what's going on? Good to see you, sir. Thanks for coming by. Always nice to see you here. Hi, Toby. How you doing, sir? Good to see you. Hi, Greg and everybody. Hello, Toby. Thanks so much for coming. Always nice to see you. So, all right. Well, interesting day today. We're having a great day, man. I'll tell you what, I'm really happy for this. So, tomorrow, last day before the Thanksgiving break. Historically, the day before Thanksgiving has a positive expectation to the market. Not always, but statistically it does. And then, of course, Thursday we have Thanksgiving, no trading there, and then Friday, half a day, closes at 1 p.m. Eastern. I'm not 100% sure if I'm going to be here Friday to do the live stream, but I'll let you know by tomorrow. So Liam Doe. Hi, Liam. Good to see you. Thank you for coming by. I don't think I've seen you before, but thank you so much. And if you have any questions, Liam, don't be shy. Just type them in the chat, and I'm happy to answer. Hey, Mount Doji. What's going on, sir? Good to see you. Thanks for coming by as always, and looking forward to hear about Mount Doji's trades today. Mount Doji always has some good, interesting trades for us. All right, so listen, the plan for today, the format for today, as usual. First of all, we're going to run the U.S. legal disclaimer. We're going to get that out of the way. Secondly, we're going to come back. We're going to look at all my current positions. We're going to talk about when I bought them, why I bought them, what methodology I used to buy them, what I was thinking about entering the trade, and then more importantly, after that, how I'm going to manage them going forward, either to the upside or the downside. After that, we're going to talk a little bit about trading psychology. I can't have a live stream go by without trading psychology because I think it's so important for you. Right, and that's why I bring this up every day, is because it's important to be a good technical trader, understand support, resistance, all these kind of things that we talk about here. But the one thing that's hard to teach, but is the greatest skill that you can acquire in trading, is being able to follow your plan. And the reason trading psychology factors in following your plan is because most people cannot follow their plan. They get in a trade, it starts going against them, they get scared, they get out, or if it starts going up their way, they start getting out, they start getting some emotions revved up, and then they get out. But in my experience, guys, the best way to be able to follow your plan, it's very simple. Position size conservatively so that the gains or the losses do not affect you and do not make you deviate from your plan. So having discipline, staying with your plan, all circles back to trader psychology, and that's why I like to talk about it each day. So we're going to talk about that. Then we are going to go down through each stock in my watch list, and we're going to take a look at the support and resistance levels. We're going to take a look at indicators like MACD, RSI, moving averages, ATR channels. And the way that I view trading is when I look at a chart and I see an indicator, something positive happen with an indicator, I look at that indicator triggering as a group of buyers. And so you're going to be much more likely to have a positive, profitable trade if you wait for a confluence or a combination of indicators lining up. You need other buyers to be in your camp on your side if you want the stock to go up. So if I look at an indicator as a potential group of buyers, then if I look at a trade that has 2 or 3 or 4 indicators lining up all at the same time, I look at that as a group of 2 or 3 or 4 groups of buyers, and the more buyers, the better. So that's really what I look for. I look for a confluence, or I look for a combination of indicators lining up, or a different way to say, I look for different groups of buyers lining up, and ideally I like to see a combination of buyers lining up. Then so we're going to go down, we're going to look through my watch list one by one, and that's what we're going to look for. We're going to look for a combination or a confluence of indicators / buyers lining up. If something looks good, I'll mark it on the watch list. At the end of the day, as we get closer to the close, I'll go back down through that watch list with a fine-tooth comb, and then specifically look for risk to reward ratios as well. So it's important to have technical indicators lining up, or / groups of buyers lining up. But even if you have something that looks good that lines up, you still have to make sure that the risk to reward makes sense before you take the trade. You can have great indicators lining up, but maybe they're too far extended away from your channel, or the RSI reading, if you use that as a filter, is too high, and then sometimes you'll just have to let those go. So step 1, look for a confluence of indicators. Step 2, make sure that your risk to reward ratio makes sense from a support and resistance level, whatever you're using on your charts. And I should say step 3, make sure you don't have too much correlation or the same type of stocks that are in the same industry. I mean, you don't want to take 3 or 4 tech stocks at the same time. You may have great setups on all of them, but now you're too heavily correlated in one particular industry. So step 1, look for a confluence of signals. Step 2, make sure you have a good risk to reward ratio. And then step 3, make sure you're diversified in your holdings, in your stock positions, that you don't have everything in tobaccos, for example, or you don't have everything in tech. You know, spread it around a little bit. Diversification in stock trading is definitely good and advised. Then if I can find something in the end of the day meets all those criteria, then I'll go ahead and take the position right before the close of the market. And then after that, after the market closes, if you have any questions for me, please let me know. I'm happy to answer them, happy to clarify anything that I discussed that I was not clear on. If you'd like me to take a look at any particular stock symbols, I'm happy to give you my humble opinion. If you have any other questions about trading, even if it's something that we didn't talk about today, feel free. That's why I'm here. And if you do have a stock symbol that you think would be helpful for the group to look at, if you've looked at it and it looks good to you, by all means, go ahead and share it in the chat. Maybe put a star by it or an asterisk so I know it's time sensitive. So that I can, give you my opinion on it before the close of the market. So that is the plan. Sound good? All righty. So hang tight. I'm going to run the U.S. legal disclaimer, and I will be back in about 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. Mount Doji said, saw some engulfing V1, V2s on LGF/A. Ooh. Let me see if I can pull up that kind of stuff, Mount Doji. Oh. LGF/A, right? Am I missing something here? Oh, it's not pulling up this this symbol for me, Mount Doji. It's yesterday's date, not today's. Maybe it has not traded. I don't know. Let me try the other one. LGF/B. Oh, there we go. Well, yes, bullish engulfing for sure. But you know, Mount Doji, I mean, you know my filters, right? Doesn't mean it's not going to be a great trade, but you know, it's above value, above the value zone, comes into the value zone, has 1 day of sidewards movement is all. True, has a V1 here. But it didn't move sideways enough for me. And I don't like that it's how close it is to the 1 ATR channel. And I don't like how much it's already given back from the top. Does that make sense? So this looks more like a bounce. A lot of times you will get down, down. If you don't move sideways, you go down, 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 bounce. But it's usually a day or two, and then that's it. It's, in my opinion, it's a much stronger signal if it could come into the value zone, move sideways, then get your V1 or V2. But just standalone here, I would not take this because it's so close to the 1 ATR channel. And as you know, most oftentimes, or oftentimes, I guess is the more correct way to say, find resistance there. And I don't like how it was so much higher today and now it's lower. So just my opinion. But I hope that helped. Hey, Matt, or Jesse, what's going on, bud? Good to see you, sir. Thank you for coming by, as always. Any trades you have, Jesse? I can't remember now. I can't remember if you have Home Depot, if you have Twitter or Etsy or a combination. Hey, Jackson, good morning, sir. Hope you had a good night's sleep there in Australia. Nice and cold over here, and I think nice and sunny and warm down there, I imagine, right? So, all right. Well, let's get to it then, should we? Unless anybody has any questions before I get started. All right. And here we go. All right, first trade, Amazon. I did buy Amazon yesterday at the close of the market on the 25th of November. I bought it because we closed above the 250-day moving average. Does this just by itself mean it's going to go up? Absolutely not. But you know, based upon long-term back test of Amazon, it is a profitable approach to buy Amazon over the 250-day, stay in it as long as it is above the 250-day, get out of it if it closes below the 250-day. You know, the whole concept with these kind of trades, the above the 250, under the 250, or the above the 200, under the 200, is that, you know, you've made it through some resistance above you. Now it should act as support. If you're wrong, you should be wrong fairly small. I mean, of course, it can go and come crashing down, but just on an ATR basis, average true range basis, you're probably going to be wrong fairly small. And if you are fortunate enough for it to go up, you may catch a trend. So it offers you a good risk to reward, and that is what's important in trading, is having a good risk to reward. So we did buy it yesterday, 1774.16. You can see it's moved nicely up for us. We have hit 2 profit targets on this so far. I will be interested to see how it reacts around the 200. If we get up to the 200 and it rejects it, I will go ahead and just take off the trade. As long as it moves further than 1 ATR away from my channel, or from my entry, I will instigate some kind of trailing stop, like a close below the previous day's low. But so far, everything looks looks good. It's off the high, but still up nicely today. And like I said, we did hit 2 profit targets. And I do like to scale out of my positions as the market moves up, especially on bigger range days. I like to take a little bit off. It depends. Sometimes I take 8% off at each profit target. Sometimes I take 10. Just depends on where I put my ultimate profit target and what the ATR ranges are that day. So I think I took about 16% of this trade off. I think I'm just kind of going from memory. I could be off, but I think about 8% here, 8% here. So I'm out of about 16% of this trade, but so far so good. MACD did go positive, or yes, MACD did go positive today. That's always a good sign. Always look for that. You know, doesn't mean you have a MACD crossover, it's going to immediately go your way, but I'll tell you what, it's certainly nice to have. It's certainly one more indicator. There are some people that just buy when the MACD crosses. That's it. I don't think that's enough, honestly, to be able to extract money from the market. Maybe it is. I don't know. I've never gone ahead and just based a trade over just a MACD crossover, but it is a good confirming indicator. In addition to us being able to close above the 250. So going forward, if it keeps moving up, I'll instigate some kind of trailing stop. If it keeps moving up and rejects the 200, I would go ahead, lock in profits there. If it closes above the 200, I would move my stop up to the 200. So that's the plan on Amazon. Hey Frank, how you doing? Good to see you, sir. Frank says, hello Greg and friends. Thank you for always offering a seat at your table for a serving of wisdom, discipline, and great stop picking. Oh, thank you, Frank. Thanks for the kind words. I appreciate it. And yeah, I'm glad you look at it that way, because that's what I try to provide. Oh, I got an F-35 going over my house, literally. They fly down the canyon, fly over my house all day long. Been doing night flights lately too. That's loud, I'll tell you what. So anyway, Amazon's doing great. Thank you, Amazon. Christopher, hey, how you doing, Christopher? Christopher says, what are your targets? What are your targets? Are they based on ATR? So when I say profit targets, yes, they are based upon ATR. They're based upon a 0.45 ATR, or 0.45 of the average true range. Right now, the 0.45 is $9.66. So from my entry that I put in last night, I put a profit target $9.66 above my entry. Then I put another profit target $9.66 above that first profit target. And so those are my profit targets, not to be confused with important resistance levels like the 200 above or the 70 RSI above. Those are not profit targets. Those are, if they are rejected to the upside, those are areas for me to lock in and take profits on the entire trade. So the 0.45 range are my daily profit targets, but like the 200 RSI, 50 RSI, things like that, those are my kind of crucial resistance levels where I'll either stay in the trade or just lock in the trade. So I hope that helps, Christopher. All right, Etsy. So I did buy Etsy back here on the 21st of November. You heard me speak earlier about looking for a confluence of signals. Well, this was a confluence of signals. First signal, previous day we closed under 30. Day that I bought it, we closed over 30. That is a indicator. That is a signal for me, an entry signal, under 30, over 30. But in addition to that, also had a V2. Here is day 1. Here is day 2. Here is day 3. Day 2 washes out day 1. Day 3, my entry day, closed above day 1's close. That is also an entry trigger. So I had under 30, over 30. I had the nice V2 signal as well. It's a higher low V2, which I like better, because lower lows, people buy here, they're just looking for a bounce to sell. That's exactly what happened. Once it started to kind of get a little weak, the people that bought here sold here, but then a whole new group of buyers came in, including myself, on the day that I bought it. And the reason that's good is because the people that bought it here sold it here. Hold on one sec. Yes. I think that was Amazon, I hope. But the people that bought it here, sorry about that, guys. The people that bought it here as it moved up. They sold it before the new buyers came in. But now the people that bought here sold here. So moving up, we don't have to worry about these buyers because these buyers sold here. So anyway, with that said, nice combination signals. And by the way, we had the MACD crossover. So we had V2 under 30, over 30, or higher low V2 under 30, over 30, and a MACD crossover. So this has been a really, really nice trade. You can see, I mean, I think it's up close to 5, or it was at the top 6% so far on the move. So I've scaled out. See, I did hit one profit target today. I do not like that we rejected that 20-day moving average. You know, when I just said, you know, there's a difference between profit targets and resistance levels. Well, here's a profit target, hit one. There's another one, didn't hit that. There's another one, didn't hit that. So these are profit targets. I am looking at this 20-day moving average here as a resistance, and I don't like that we pegged it and closed right back off of it. And also, I don't like that we had this big range bar, and it looks like we're closing in the bottom half of the bar. That being said, it looks like I am going to be taking this off at the end of the day and just locking in this nice, easy 3-day gain here. I mean, it might continue up, no doubt about it, but you know, there's not a lot of resistance above here. I mean, we have all the stuff up here. We have the 100 and the 10 and the 50 and all that stuff. So I'm looking at this downward sloping 20 EMA as some serious resistance, and that's exactly where it got to. So unless it closes back above that 20-day moving average at the end of the day, I am most likely going to get out. But again, I don't like that it got rejected from something serious above it, and I don't like that it looks like it's closing in the bottom half. That's important because, you know, from a Fibonacci standpoint, from a 50% Fibonacci number, even if it came up here, it should have held halfway, but now it looks like it's going to close under. I mean, the market's not closed yet, but so we'll see. But very likely I'll be taking this off today. Hey, Steve Burns, good to see you, my friend. Always nice to have you here. Always an honor and a privilege, honestly, to have you here, Steve. I'm always excited when you're here, and I know everyone else is, to be able to be in the same chat with Steve. And, you know, I mean, I don't expect you to be here, but it's awesome when you are. So thanks. Steve says, hey, Greg, nice start for our Etsy and Amazon trades. Yes, sir. Yes, sir. 2 nice trades for us. I think we're both in the same position, Amazon and Etsy. So I was just talking about Etsy here, Steve, and you know, the way that I look at this, I'm seriously considering getting out of this today because it rejected the 20-day moving average. But maybe that's not how you view it. Be interesting to know. Christopher said it's an excellent start to them. Yes, it is. Okay, so Amazon, no, sorry, Home Depot. I did buy Home Depot yesterday. We had been under the 30 RSI, Yesterday, we were under the 30 RSI, closed above the 30 RSI. Intraday, it was under. At the end of the day, it was over. That is a buy signal for me. In addition, we had a V2, right? So would I rather take an under 30 over 30 without a V2 or an under 30 over 30 with a V2? 100% with the V2, right? Because it went down here, rejected, closes above previous day's close. So I like this. This has been a nice trade, obviously, so far. Bounced right away for us. Did hit one profit target. It's up about 0.88%. Going forward, I need this to move further away from my entry, more than one ATR. If it does, I'll lock in some, institute some type of trailing stop. You know, if we get rejected here at the 100-day moving average, that also might be a reason for me to get out. So again, this was one profit target we hit. Here's another. Here's another. These are profit targets based upon the 0.45 value. If we reject the 100 above us, that would give me concern that we're rejecting something above us. So anyway, this has been a nice trade so far, and I think some of you have that, so I'm glad to hear that. Mount Doji says, sand looking interesting. Okay, I'm going to get back to that one. Steve Burns says, I saw the same on Etsy. I will see how it closes. Oh, okay. Well, that makes me feel better. 1 second. Katie wants out. Come on. There you go. 1 Okay. So Home Depot, yeah, under 30, over 30, V1. Nice start to that trade. We'll see how it goes. The all famous SPY trade. So I know I mention this each day. I'm sure it gets old, but in case we have some new viewers here, I want them to know why I take this trade every day. But I do enter a position in SPY every single day at the close, and then I sell it first thing the next morning. It's not based upon technicals, anything like that, support resistance, based upon this long-term back-tested study by Lizanne Saunders at Bespoke Invest on Twitter. She's a chief investment officer for Charles Schwab. But this back-tested approach has two variables. Variable number one, buy the SPY each day at the open, and then sell it at the close every day. Buy at the open, sell the close. Buy at the open, sell the close every day since 1993. If you would have done this for all your hard work for all those years, you'd have returned a negative 13.9% return. However, if you did the opposite, which is what I do, and buy the SPY at the close each day, and then sell it the next morning. So buy at the close, sell the next morning. Buy at the close, sell the next morning. If you would have used this approach like I do from 1993, you'd have returned a positive 634.2% compared to buying at the open, selling at the close, and negative 13.9% return. Past performance, no guarantee of future results. Of course, that's true for any trading approach or system, but I would much rather allocate capital to something that has a good back-tested results compared to something that has bad back-tested results. I really like this chart. It shows you if you trade and have an edge in your trading approach over the long run, what your returns can look like. In between, there's ups and downs. This is normal for any trading approach. Even if you have an edge, you'll have ups and downs. It's just random distribution. It's important, as with any trading approach, that you can position size conservatively so that you can withstand these ups and downs. If you're position sizing too heavily, then when you get the first drawdown, you're probably just going to get out. And I'm sure a lot of people got out here, wish they would have stayed in and let this play out for the long run. But the blue is the buy at the open, sell at the close. The orange is the buy in the morning. The blue is the buy in the afternoon, sell the next morning. The orange is the buy in the open, sell at the close. And you can see it's not even close. And by the way, if you're a day trader, look at this. You do not have a lot of movement during the day. The real moves come overnight. And a lot of day traders do not like to hold overnight because they think it's dangerous. But the fact of the matter is it's dangerous not to hold overnight because that's where the gains come from. So hope that makes sense. And with that said, did hit an all-time high using this yesterday. You can see we bought Friday, had this great move up. Friday to Monday. Okay, so Friday here we bought at the close, sold for a nice profit here. We bought yesterday at the close and we bought at 313.42 and we got out this morning at, we bought at 313.37. We got out this morning at 313.42. So we made 5 cents per share. That's how it happens. Sometimes you have really nice gains. Sometimes you have really bad losses. Sometimes you have just break evens, but technically did hit another high this year using this approach. So it's very simple method. The back-tested numbers are really good, and I've used it since February 26th of this year, and it's been outstanding. It has been outstanding. I think it is accounted for about 20% of my profits this year, just this one simple approach. So I will be buying this again at the end of the day and selling it first thing tomorrow morning. All right, last on the docket. Oh, no, that's not true. We have one more after that. I did buy Twitter, very similar to Etsy. I had a nice combination of indicators lining up. I bought it back here on the 21st of November. I bought it because the previous day we were under 30. The day that I bought it, it closed over 30. In addition to the under 30, over 30, we had a nice V2. Here's day 1, here's day 2, here's day 3. Day 2 washes out day 1. The day that we bought it, close above day 1's close, higher low V2, under 30, over 30. MACD was positive. And I have to say, I really like this because we had this sideways movement. This is called consolidation. It's not really going anywhere. Buyers aren't, or longs aren't going anywhere, but shorts are not doing anything either. There's just, you know, this would be accumulation in this kind of move. And, you know, small range consolidation bars leaves two big up bars, and you can see we were fortunate enough to have big up bars. So earlier in the day, this had been above the 20 and below, and I was looking to possibly lock in profits on this. Haven't hit a profit target yet today, but it is, if it closes above the 20-day moving average, I will go ahead and hold this and then institute a trailing stop, like a close below the previous day's low, or above us, we have the 50 RSI up here. If we reject the 50, that will also be a reason for me to lock in profits. So I'm going to have to watch this carefully at the end of the day, but so far so good. Really nice trade. And then last on the docket is McDonald's. I did sell puts on McDonald's. I sold premium. When you sell premium, you pick a price below you with a certain expiration date. If the price stays above that strike price, by the time expiration comes around, you keep all the premium that you get for selling the puts. When I identify a strike price, I like it to have some type of technical support, not just on one level, one time frame, but 3 time frames. On the monthly here, I picked the $180 price because it's right halfway in between the 1 and the -1 ATR zone. So right here at the midpoint, this should have some type of technical support from people that trade the monthly bars. On the weekly, that $180 price just nicely above the 100-week moving average. People that trade the weekly bars, I'm sure they would have some interest in buying down here. So I look, and in addition to that, low 30s, so close to a combination of a 100-week moving average and a 30 RSI. And then on the daily, the $180 price, it's way down there. Right down here. Ideally, I would have liked the 180 to line up with the 6 ATR channel, because it's very difficult to get prices to go below the 6 ATR channel. But the 5th's pretty good too. But again, on the monthly, 180 lines up halfway of the value zone, the midpoint, so it should have some support there. On the weekly, you have the 100-week moving average and the 30 RSI, and then on the daily, very low down on the ATR channels. If you sell premium, this is exactly what you want, just sideways movement, so it just eats up the time value and doesn't move. I mean, this is exactly what you want, because volatility reduces, which helps you, and the price doesn't go down, and of course the time value. So this is looking really good. I've got about 70% of the profit on this contract that I wrote. So if it does go down to under 180, technically I would be required to buy it here, but who knows? You never know. But just it's doing well so far. So anyway, yeah, 5 for 5 today. Pretty good. Wait, 1, 2, 3, 4. 1, 2, 3, 4, 5, 6. 6 for 6. So not getting cocky, but it is nice when all your positions are working out well. All right. So listen, this is the time of the day where I do like to talk about trader psychology. I told you earlier in the show why it's so important. It's the one skill that you must develop. It's the most important skill you can develop. Everyone works on their charting, their risk to reward. That's all important. But are you working on the skill of discipline, right, of your trader psychology? Are you working on it? Do you get to the point where you feel, impulsive that you want to do something? Do you get to the point where you want to break your trading plan? We all get there, but just identify that you feel that way and go, okay, I need some work on this skill. I need to stick with my plan. But there's some really good Twitter channels out there that spend a lot of time and effort, burn a lot of calories for the good of us by writing these good sayings that hopefully we'll internalize. Hopefully they'll become a part of our trading routine. And one of them is Stephen Goldstein. Stephen Goldstein was a professional trader. He's a professional trading coach. He has the Alpha Mind podcast, which I was a guest on, in case you'd like to look that up on Twitter or on Twitter. But Stephen has great quotes, and if you haven't subscribed, you should, at Alpha Mind 101. This is under his killer trading quote section. Time is your friend. Impulse is Your Enemy, by Jack Bogle. And here he is. Sorry for cutting your head off, Mr. Bogle. But Mr. Bogle was the founder of Vanguard Funds, in case you haven't heard of this. But, this is a short statement here, but it's so true. Time is your friend. Impulse is your enemy. Impulse in trading is definitely your enemy. I mean, number one enemy is impulsive moves, doing something that's not part of your plan. Time is your friend, of course, but there's two ways we can look at that. Time is your friend as far as letting an investment grow, or the way that I look at it, time is your friend as far as being patient. Being patient, waiting for a trend to set up. I've mentioned here many times, I like to look out in the future, look at a chart and say, McDonald's, for instance, doesn't look great here, but in a couple weeks, if we get this double bottom with the bullish divergence, maybe get a V1, V2, it's going to be at the third ATR channel. I don't have a position. I'm completely objective about it. I sit back, make a note to myself. If and when it gets there, I made it. It looked good for me when I was in a nice, quiet state, did not have a position. That's probably a good decision. Right? So, the biggest advantage we have as retail traders is patience. The large institutions, they have to trade. They have order flow. They have to trade. We do not have to trade. We can sit back, be patient, wait for a signal to set up, maybe that we've identified a week or so before. So 2 types of time are your friend. Time, letting an investment grow. Time, having patience, sitting back, letting time go by until that setup occurs. And then, of course, impulse is your enemy. 100%. It's 100%. People make all these buying and selling decisions impulsively. I've been there. I'm sure you've been there. But again, it goes back to trading psychology and skill, right? Have the skill not to do that. So thank you very much, Stephen, for that. Appreciate it. Hope you're doing well. Okay. Move something around here. A man solo, hey, how you doing? Good to see you. Hi, Greg and folks. Nice to have you here. Thank you. Kurt says, hey, Greg and all. Hey, buddy. What's going on, my friend? Look forward to our call on December 7th. Looking forward to speaking to you again, Kurt. Nice to have you here. Bing He, hey, buddy. How you doing? Good to see you. Excellent trade you had on that symbol yesterday. I was very happy for you. Steve Burns says, Holly said that baby Yoda from Disney Plus is driving up the Disney stock price. I did not know that. Well, something definitely is driving it up, right? Please say hello to Holly for me, Steve. Christopher Uhl, look at this. I have two legends here, Steve Burns and Christopher Uhl. Thank you both for coming. Christopher says, at Steve, Baby Yoda is the best thing on Disney right now. Oh, I don't know what Baby Yoda is, so I'm not in on this. But if Steve and Chris both say it, must be true. Thanks for coming, Chris. Jackson says, seeing a lot of V1s, V2s, but as you say, when coming from above value, I don't like to take unless they have sideways movement. Zag yesterday was a good example of this, and R&R didn't make sense after. Yeah. Oof. Yeah, I know we talked about that. I mean, technically technically it was above value, into value. The risk reward was a little funky. Um, but, sometimes you can have great setups, they don't work. But yeah, this one obviously didn't work. However, if I didn't take this trade, but if I did take the trade, my initial stop would be halfway the washout bar, and it hasn't got there. Mandalorian, a new TV show which has a baby Yoda, Greg. Ah, I do not have TV. I'm one of those guys. I mean, I have a TV and I watch Netflix and things like that, but I don't subscribe to Disney Plus. So, hey, Merritt, good to see you, my friend. Merritt's our friend from Norway. So, hope you're doing well. If you have any trades, please let us know. All right, so how are we doing on time? Ooh, time got away. Well, let's get to it. Go down, take a look here. So Apple just too high here. I'm looking for a pullback into the value zone before I can buy this. So we're above the 1 ATR. At the very least, I need to come back in the value zone. Sideways movement. Look for a V1, V2 trigger. Dolby, very, very strong, extremely strong, over 70 RSI. Looks like it's still over the third ATR channel. It's been extremely strong. But again, as with Apple, I need to pull back into the value zone between the two green lines. Sideways movement, look for a V1, V2. Dr. Elder, anytime you're above the 1 ATR channel, Dr. Elder says you are buying above value. You're buying retail. He wants to buy at wholesale or under wholesale, or he wants to buy in value or under value. He does not want to buy over value. Advanced Micro Devices was overvalued. It's starting to look like it's moving its way back into the value zone. So we'll be watching this in the future, looking for it to come down deeper in the value zone. Sideways movement, V1, V2. How's our Amazon doing? Amazon is great. Of course, we bought that with the break back over the 200. MACD went positive today, 2 profit targets. So this is looking good so far. Boeing, it's doing fine. It's above the 200, but it's above the 1 ATR channel. I don't want to buy here, what I considered overvalued. It needs to come back into the value zone at the very least. Berkshire, well, this is interesting. We went above value. Of course, we didn't want to buy up there, and it was a good thing we didn't. Comes back into value, had a couple days sideways movement, then bounced, or had, I guess, a couple, but no trigger here. It bounced. Now we're lower. Now we have a lower high. This high is lower than here. This high is lower than there. Whenever I come back into the value zone, bounce, but don't move back up and form a lower high, I need to wash out the previous low before I can get into a trade. So nothing on Berkshire here. Caterpillar, nothing on Caterpillar. This was a good example of a above value into the in value. Couple days sideward, spike down, reverse back up. I should have taken this trade. I had planned to take this trade here on this V2 4 days ago, but I got busy with another stock and I didn't get it at the end, but you can see would have worked out nicely. Dow Jones, concerned about the Dow Jones. We have a high, we went down, now we have an equal to, we have tall MACD bars, the green bars, then we have the red bars. Now we're even higher with lower MACD bars. That indicates slowing momentum. This is what Dr. Elder would put on his list too short. He would consider this somewhat bearish. Walt Disney, here's the Yoda thing, breaking out here. Excellent, just too high. Again, need to pull back into value before I can even get interested on this. Etsy, very likely I'm going to take this off today. Under 30, over 30 V2. It's been a nice trade, 1 profit target, but I don't like how it rejected the downward sloping 20 EMA, and now it definitely looks like it's going to close in the bottom half. If it goes roaring up tomorrow, it'll be the wrong decision. If it goes roaring down tomorrow, it will be the right decision. But, this has been a really nice trade. I'm not going to overstay my welcome, and there's two things going on here technically that look bearish to me. Ford. Okay, nothing on Ford. Facebook, too high. Just poked its head into value earlier. Now it's above, but I needed to come back into value. 5 below. Kind of a big volatile day here. Could possibly set us up for a V2 tomorrow if we could take out day ones, but nothing there. Gold, definitely stronger today, back in the value zone. I'd be waiting for the 5 to cross over the 20. That's the gold miners. Gold itself, nice V1 here. I like silver better, and I'll show you why. But this does look good, but I like silver better. Google did come into the value zone, couple days sideways movement, but not a real valid V2 here. So nothing here now. Goldman Sachs had a couple nice big days up. It closed above the 1 ATR channel, needed to come back into the value sideways movement, V1, V2, of course. Home Depot, of course, we bought the under 30, over 30 with the combination of the V1 yesterday at the close. Working very nicely here. Biotech is just insane. Of course, obviously, I wish I would have bought it back here or in here, but of course it's above the 1 ATR channel. It's just too high for me. Doesn't mean that it's always going to go right down when it gets up. As you can see, this is one of those exceptions, but this doesn't happen very often, guys. You know, it really does not happen very often. Out of 10 times, you might have 8 times where it gets up here, then comes back down. So I'd rather put my money on something that wins 8 times out of 10 than 2 out of 10. Intel still needed to come back into value. Look for a V1. Russell having a big day. Bit of a reversal bar here, though. Just too high. Need to pull back into value. Johnson & Johnson moved up very strongly. Closed above the 1 ATR channel. I needed to move back into value now and to try to buy that dip. Coca-Cola. Big, strong move here. You know, this looks like a cup and handle, although it's not technically a cup and handle. I mean, it is a cup and handle, but a real cup and handle, you need the cup to come down, the other side to come up about 3/4 of the way from the bottom to the top. This didn't quite get there, but still, this is this is pretty good. We went up, went down now. We took out this high, took out this fractal. I don't think I'm going to buy this, but it's interesting that you're starting to see some money go into some of these defensive stocks like Coca-Cola. Lockheed Martin, too high, need to come into value. MasterCard, doing very, very well. Of course, it's too high. Needed to pull back into value and buy a dip like this one. But I didn't. This is what I was looking for, but there was no V1, V2 here. So if it comes back down and we get a valid signal, I'll buy that dip. McDonald's, we talked about that. I have a put of that back down to 180. Altria, very, very strong above the 1 ATR channel again. I need a dip buy, I need a pull back. I can't chase it up there. Merck, same thing, need a pullback. Microsoft, very, very strong, isn't it? Wow, unbelievable, unbelievable. It's at the 3rd ATR channel. We know 90% of prices generally fail there. Look at this, failed. Got above for a little bit. Now we're back here. So really strong, but really too high for me. Netflix, big, big run. Need to pull back into value. Nike. Same thing. Pull back into value. Sorry, I'm a broken record here, guys, but that's just what's happening. You know, this is interesting. We were above value. We came back into value. See, technically, we had a V2 today. Day 1, day 2, day 3. Day 2 washes out day 1. Day 3 earlier was above day 1. It's close. I would never take this because V1, this day 1 is way too big. And again, it doesn't have sidewards motion. So a lot of the times, if you go straight down like this, you might get a bounce, but that bounce is generally short-lived. Much better if it comes down, moves sideways, then it gives you a bit of a foundation that you can trade off and move upwards. PayPal, very strong. Woo, I considered taking this yesterday, but we never quite closed under the 1 ATR channel. If it closes under the 1 ATR channel, rallies back up, has a V2, then you can take it, but it never quite closed above there. So that V2 did nicely today. If I had taken this V2, I would be very concerned if it rejects the 200 above me. Q's up a little bit. Again, we have a high, we have a dip, we have a higher high. On this leg up, very strong MACD bars. Then we have negative MACD bars. Now we're higher than here. No green to be found. This is what Dr. Alexander Elder calls a double top with a bearish missing right shoulder. So, you know, I know how Dr. Alexander views these things. He would be viewing this as getting ready for a short position because the second move is running out of momentum. Here's silver. I like silver, guys. Look, it's a higher low V2 back into the value zone. Bullish engulfing bar. I do like silver. My stop here would be halfway of the washout bar. It's one of those V1E V2s. Technically it's a V1 because today washed out yesterday's low, but it also looks like a V2, but you can't have both of them. But halfway of the washout bar is about the same for both. So I do like it, and we've got some volume coming in here. So see the larger the volume here. So we have bullish engulfing bar, higher low V1 into the value zone, and MACD did go positive. So looks like I'm going to be buying silver at the end of the day. Buying SPY at the end of the day, of course. TLT, boy, look at this. From the negative third ATR channel right to the positive third ATR channel. Caught support at generally where it does at the third, and most likely run into some resistance up here, but nothing there. Tesla down quite a bit today. Twitter, holy smokes. Well, it looks, oh, we hit our profit target. Sweet. All right. So Twitter is definitely going to be a hold here. United Healthcare is too high. Oil, too high. Need a pullback. VIX, just getting clubbed all the way down here. But we are making a low. Lower low, lower low, very strong momentum bars, not so strong, and this one's kind of strong. But anyway, it's just too low to do anything, or just it's low, but it needs to do something for me to get interested. Close back above the third ATR channel at the very least, or close back above the 30. Verizon, nothing there. Walmart just moving sideways. Energy, nothing there. Financial sector too high, need a pullback. Real estate, it's a higher low but no V1, V2. Utilities, I did have to get out of that yesterday. Took this higher low V2 here, move, but then yesterday it closed below halfway the washout, so I had to get out, but that's up today. And healthcare. So really the only thing that I see on the potential list today is silver, SLV, because of the higher low V1, V2 back in the value zone. So that's what it looks like. So I'm going to go ahead and get rid of Etsy. Let me just quickly get rid of that. That was a nice trade though. Something going on with my sound here. All right, so Amazon's looking good. I did get out of Etsy. Home Depot's like a champion over here. Twitter's like a champion. All right, so I am going to go ahead and buy silver. Let me just do this, and then I can... It's over the 200-day, so I am going to buy a full position. All right, let's look, Mansell, let's look at San. Well, again, I mean, we were above the value zone, came into the value zone. We have a V2 here. There's no doubt about it, but there's not a lot of sideways movement. We went down, we went down, we went down, then we rallied. So, you know, if you took this trade, I would, you know, definitely use a stop below halfway of the washout bar. But me personally, I would not take the trade for that reason. Yeah, it is a V2. It's a little stretched up here. We're a little close to the 50 RSI also. Just give me one sec, guys. Yes, but it, you know, it does look like it's a V2. I like silver better. I like silver better. It looks like a cleaner V2 to me, barely into the value zone. This one's higher in the value zone, so more likely to find resistance around here. But, you know, the thing is, whether silver or gold, they're most likely both going to go in the same direction. So I hope that helped. Man Solo. Mount Doji says, thoughts on Verizon? It's not bad. It's a higher low V2. The only thing I'd like a little better, Mount Doji, is once you make this lower low, you come up. I'd like to have 2 days of two down days before the V1 or V2. Doesn't mean I wouldn't take it. It looks strong. I mean, I just like having 2 down days before taking those higher low V1s, V2s. But it's certainly legitimate. Looks like it might close above the 50, close above the 50 RSI. That's all good. You know, if I were to buy this, I'd probably go, you know, right about here for my stop. But it does give you a good risk to reward. Of course, we never know if it's going to go up or down, but it does give you a good risk to reward ratio. And it is a higher low. Okay. Amazon's good. Definitely good. Going to be buying SPY at the end of the day. Oh, Home Depot's really moving up nice, isn't it? Look at Twitter. This was just putting around all day long. Maybe it hit our second profit target. Wow, this has been a good trade. So we have 40 seconds left. Jesse, VTR. Oh, sorry. Hope I have time here. Well, it was a lower low V2 yesterday. Not bad from yesterday. I don't think I'd buy it today. I think yesterday would have been the day to have bought it. Did you buy VTR yesterday, Jesse? Because we did have a V2 here. Now it wasn't, you know, near the oh wait, it was. Sorry. Okay, I got you. I wasn't looking at the RSI. Yeah, it's fine. Yeah, I obviously yesterday it looked better, but I didn't realize it was under the 30 RSI. So today it went over the 30 RSI. Yeah, I like it, and the reason I do like it, Jesse, is not it's because it's a combination. It's under 30, over 30. But if you look this down leg, we have deep MACD bars. We did have a little bit of a rally, had some green bars. We came lower, didn't even have less green bars. We had no green bars. So that's a bullish divergence with the missing right shoulder. So this right here, if we didn't look at this day, this is looking bullish for any type of setup or trigger. Well, there was your trigger there today, right? The under 30, over 30. I like that a lot. Did you take that, Jess? Close under 30, over 30. Yep. I just realized that. I didn't look closely enough, but yeah, I mean, double bottom, bullish divergence, missing right shoulder, MACD positive, everything good, but you need some kind of trigger. The under 30, over 30 was your trigger today. Bing He says, Greg, between MACD bullish divergence and a 30 and an RSI 30 crossover, which one has a stronger signal to buy? I would say the under 30, over 30 RSI. Between the two. But if you can get them together, it's better, right? I think the under 30, over 30 is better than the MACD bullish divergence. Sorry, I read that wrong, Being He. MACD bullish divergence. I thought crossover. Well, the thing is, Being He, is just because you have a bullish divergence doesn't mean you enter the trade. So it's kind of two separate things. The under 30, over 30 is more the entry into the signal, where the MACD bullish divergence is more of a context. It's the context. It's a good area to be looking at, but it doesn't mean you get, just because you have a bullish MACD divergence doesn't mean you enter. It's just the setup, the big picture looks good, but then you need the trigger. And then the under 30, over 30 on the RSI is the trigger. Does that make sense? Jesse took it. All right, good. I'm going to be watching that for Jesse. Oops. All right. Hey, listen, before we keep moving on, I just want to put in my quick plug every day. Hope you guys okay with that, but I do want to mention to everyone that I do offer private coaching and teaching lessons in the evening time via Skype. They're one-on-one lessons. They're live. They're on Skype. I have a 5 2-hour program. So there's 5 sessions, 2 hours per session, but a lot of times they go to 3 hours. No extra charge for that, but I just want to make sure you understand each segment. But I've had great success with my clients. I get a lot of nice letters and comments saying, I'm really glad that I took your course. I've learned a lot, and really glad to hear those. Kind of makes it all worthwhile. But, if you're interested in taking the course with me one-on-one, please let me know. You can reach out to me on Twitter, or you can reach out to me on my email. My email's in the description of this video. The course is $1,000, but I think it's money well spent. I think you're going to have a really good understanding and a good way to look at the market. And I teach you everything I know about technical analysis, trader psychology, money management, everything I've learned over the last 24 years being a full-time trader. So, if you're thinking about it, want to make an investment for yourself for next year, I think it'd be a great idea. And like I said, if you're interested, please reach out to me on Twitter. You can email me. We can do a quick, 30, 40 minute kind of interview on Skype. I just want to make sure it's a good fit for both of us doing the Skype call. There's no obligation, but just I want to make sure I put a lot of time and a lot of energy into my students. I just want to make sure that it's a good match and that I'm a good match for you. So, if you kind of want to kick the tires, talk to me about it, please reach out to me, email or Twitter. And then if you like today's content, and if you think it's valuable and it's helping you with your trading and how you view the market, please do me a favor. I really would appreciate if you could hit the thumbs up button. It helps grow the Twitter channel, or it helps grow the YouTube channel, and gets it out to more people. And there's a lot of people out there that need help with trading, trust me. Hey, listen, I want to show you real quick. You guys always hear me talk about hiking. So that's where I hike. This is my driveway. You can see, I told you we had snow. I plowed the snow yesterday, but isn't that beautiful where I live up here in the mountains, up in Utah? So see this right here? This is the trailhead. So I just go down my driveway, boom, Katie and I, and then we go all the way up into here. But I thought that was a beautiful picture this morning I wanted to take and show you guys. Ventus is a top performing stop of all time, is it? So that's the monthly. Into the value zone, I like that on the monthly. Weekly. This is another good example here, guys, why it's important to look at things on different time frames. So on the daily, okay, and everybody looks at the daily. Okay, under 30, over 30. We have the double bottom, bullish divergence. That looks good. But then let's go over to the weekly. Look at the weekly. Catching support at the third ATR channel, negative third ATR channel. Also catching support at the 100-week moving average. So remember, people trade on different time frames. Some trade just daily. Some actually just trade weekly. Some trade monthly, if you can believe it, right? But if I were trading VTR on the weekly, well, look at this confluence. 200, negative third ATR channel, 100 in the 30s. This looks good. So if I'm trading on the daily with the double bottom, MACD bullish divergence under 30, over 30. I like this, but then if we take a look over here in the weekly, look, I also have support on the weekly chart, and on the monthly, we got support at the 50-month moving average in the value zone. So yes, I like it. Doesn't mean it's going to go up. No, it does not, but it does have good support levels on all time frames, and then we have the nice trigger. So I hope that goes well. Jesse says, "What a backyard." That's my backyard. And then my other backyard, this is looking kind of north, but looking directly east is just like this, more mountains. But I'm the last house here in Ogden. So isn't this something? Isn't that beautiful? Bing He says, my own thought is that computer is easier to program to check RSI, but not MACD divergence. Thus, RSI signal is stronger. Yeah, but yeah, I mean, I think there's been a lot of back tests done on RSI. But again, if you have a MACD divergence along with the RSI trigger, it's better. So if I had one stock that had under 30, over 30, but no divergence, but then I had another stock that had under 30, over 30, but had a double bottom with the bullish divergence, no doubt in my mind, I would take that one because it had two indicators lining up. Murat said, it's snowing heavy here as well. I would imagine in Norway. How'd you do today, Murat? What's going on? Any trades for us? Oh, Mount Doji says ALK. I'll tell you what, Mount Doji, if you're there, why don't you break down the chart for me? I know Jesse and Kirk and my students, if they're listening, are laughing because they get this like 500 times a night. But I'd like to get your opinion, Mount Doji, on this chart. I know it's hard because you have to type it in, but in general, what do you think you see there? Evan says, I ended up taking ATVI at the last minute yesterday. So far, so good. Okay, let's take a look. Oh, that's right. That's right. Evan did take... Wait a minute. Oh, yes. Okay. He took the higher low V2. Here's day 1. Here's day 2. Day 2 washes out day 1. Day 3, the day that Evan bought it, he bought it because it closed above day 1's close, giving a V2, and moved up nicely. Very good. And you notice we have MACD crossover here today as well, Evan. So, I mean, you didn't know that when you took this, but this should make you feel better about the trade. Doesn't mean you should avoid taking your stop loss just because you have the MACD, but it is kind of a nice cherry confirmation after the fact. So, very good. Way to go. Jesse's laughing because of having Mount Doji, having to break this down. Now I lost Mount Doji's. Okay, ALK. Higher low V1 today, cross over the 50 RSI. So, yes, you're right. I don't think I like this V1 though. Do you notice, remember how I like to have, when we close under the 1 ATR channel, we close back in the channel, or we have a couple days down before we have the V1 or V2. This actually didn't have even 1 day down. Yesterday, it looks like it was up slightly. So, and we did not wash out the previous day's low by more than 1 ATR. I mean, I don't know if you took this or not. And if you did, I really hope it goes up. But yes, I mean, technically it's a V1, but it didn't wash it out very much. But it is a higher low V1, and it did close over 50, so definitely could be worse. But if you have this, I hope it keeps moving up for you. But me personally, I wouldn't have taken this because it didn't have a good couple days down, like silver. See, compare that to silver, where we make a lower low, we go up. See, we have 2 days down. We have 1, 2, 3 days down. Then a whole new group of buyers came in. It's obviously a new group of buyers, right? Down, 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 down. And then big bullish engulfing bar back above. Now this one's not over 50, so not quite as good as yours in that department, but it is a bullish engulfing bar. Did wash it out. If you take the V2 here, this bar washed that out very nicely, a lot more than 1 ATR. So we'll see what happens. And the other thing too, guys, is that, you know, I have equities. I have Amazon, Etsy we got out of. Thank you, Etsy. That was a good trade. Oh, I didn't mention where we got in, did we? Did I? So SLV, we got at 1598, and SPY, we got at 314.08. My stop's going to be right about there. And then SPY, $314.08. Well, that was a bad fill. That was horrible. Look at that. 314.08. Now it's 314.96. That was no good. But my point is that, you know, Amazon stock, Home Depot stock, Twitter stock, SPY stock. So I'm glad to add a little silver in here because of correlation. I have a little something non-stock market in here. right? Oh, Gamer, you're from Denver. I didn't know that. Now I do. Thanks for coming, buddy. Good to see you. Yeah, I think we had the same snow. I think we got it and then it headed over to you. Murat says, nothing interesting on my side. Whenever I don't stick with my initial plan, I get punished. Learning is a never-ending process, I guess. Those are wise words, Murat, and it's true. I mean, if you guys are honest with yourselves, how often when you don't stick with your plan does it work out trading? For me, not very often. And it's aggravating. You know, if you don't have a plan, then you can do anything, anytime. And it's too much stress. It's just nice to have a plan. You don't know if the plan is going to work out, but at least you know what you're going to do. If you don't have a plan, you enter impulsively, then you really don't know what to do. You don't really, enough isn't enough to the upside. And if it goes down, you don't want to sell it because you don't want to lose it. So, you know, my advice is really try to come up with a plan where you know what you're going to do no matter what happens. If it goes up, I'm going to do this. If it goes down, I'm going to do this. If this happens, I'm going to do that. If that happens, I'm going to do this. Jesse says, I won't even comment on the weather here in northern Minnesota. Just assume it sucks and freezing until about May or June. Oh, yeah. Jesse's not going to give us any sympathy. Right, Gamer? He's up in northern Minnesota. I would imagine Norway's similar. I'm not sure, but Murd and Jesse are like, what are you guys talking about? It's like springtime. Evan says, yeah, I'm keeping a close eye on it. Great. Mount Doji said, Bing He says, ALK rejected the 20. You know what, Bing He, I would like if it closed above the 20. I would like that better. I mean, I wouldn't have taken the trade anyway because it didn't really have much of a couple days down and not a good washout bar. But if it was a perfect setup and the perfect V1, V2, and it did this, I would still take it, being above the 50 and so forth. I wouldn't not enter the trade because of this littly washout bar. Something like Etsy, or what somebody showed me, like a huge rejection like that, I definitely would not take it. And then somebody showed me earlier, what was it? Not ALK. It wasn't VTR. Sand? No, it wasn't sand. Frank says, when I look at your mountain, all I can see is an outline of a chart. Well, yes, I understand what you're saying, Frank. That becomes the burden we all look at whenever we see anything. What do we see? Oh, we see a high. We see a lower high. Ooh, and a sell-off. We see a high. We see a 32.8% fib retracement. We see a breakout over here. Nice trend. Dun, 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 dun. Right? Hey, Wayne. K, what's going on, bud? Wayne says, hello, Mr. Greg. I am still in CMG. Entry was at 760. Been rolling up options, taking profit, target 824. Oh. Kurt has CMG as well. Whoa. Kurt, buddy. And Wayne. Look at this, everybody. You guys remember when Kurt took the took the 520 crossover thanks to Jesse, helping him out with Trend Spider on the back test? Look at this. Look at this move. Unbelievable. Nice going, Wayne. So, Wayne, did you took, oh, let's see. Oh, you took it a little lower, so you didn't take the 520 cross over like Kurt did, but you took it a little lower right down in here somewhere, maybe the break above here possibly. Congratulations, you guys. Been rolling up options, taking profits. Profit target's 824. All right, well, let's look at that 824 level. Okay. Yeah, somewhere in there. You know this big bar down here? Very likely we're going to get stuck about halfway of this bar. So to me, it looks like it has a little bit more upside potential. I mean, it could just go roaring back up. Of course, we don't know. But from this big bar here, from the Fibonacci standpoint, you know, that's about halfway. So anyway, just make sure you guys trail that up a little bit. Fantastic trade. I'm so happy for both of you. Christopher says, just looking back, was that a V2 on the Dow on November 24th? On the Dow, okay. Am I looking at the right chart, Christopher? This is the Dow Jones Industrial. I don't have a 23rd. It goes from the 22nd to the 25th. Jackson says, someone new enters the group while he's talking about his mountain trending. They're like, what kind of channel is this? Is this a mountain climbing channel? Very nice. Very nice, Jackson. I like Jackson's sense of humor. It's the same as mine. Yep. Nice trend, nice trend, nice trend. Uh-oh, lower high. Maybe that's a higher high. I guess it is. Actually, it's lower high because I know these mountains, but from this, it looks low. It looks higher, but it is lower. Yeah. Yeah, so there was not a V2 on this, Chris. We went down. See, I would have need to come in the value zone. We didn't go low enough, but it did go down. Did have 1 day's of sidewards movement, but this bar did not wash out that bar. So it couldn't have been a V1, couldn't be a V2 without this bar washing out. So no, it just went down inside bar and then took off from there. So no legitimate V1 or V2. This, however, is a V2. This is a good example. We're above the 1 ATR channel. We come into the ATR channel. See the sideways movement here, guys? Sideways, 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 sideways. This bar washes out that bar. Next day closes above that bar. This is a V2. But see the difference in going above the 1 ATR channel, coming into the channel, clear sideways movement, right? Clear, 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 clear. V2. Compared to something that, like sand maybe. See on sand, we come down, but we're down, 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 then bounce. No sideways movement, just down, bounce up. Compared to the Dow, where we go up, down, sideways, 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 then V2. It's a big distinction. You know, Christopher, in the description of this video, I have 4 lessons. They're on my YouTube channel. They're totally free. But if you look under V1, V2 entries, there's a list of 4 lessons below in the description here. And if you get some time, click on that link, watch it on YouTube. It's totally free. And I talk I talk in detail about V1s and V2s for about an hour, and V1s or V2s are hugely important. I mean, 70% of my entries are probably V1s or V2s. I learned that from Carrie Lavorne, one of my teachers and mentors, and it's a great entry trigger for any type of trade. And so, I can't go into the depth here and now that I did on that video, but watch that video, and then if you have any questions, let me know. Christopher says, think my broker makes up the prices as they are 24 hours. Laugh out loud. And they did on 24. Celendix in UK. Are you from the UK, Christopher? Wow. That CMG trade. So glad for you guys. And Jess, what are you in right now, Jesse? I think Jesse's in... I can't remember now. Darn it. And I think Bing He took the Home Depot trade also, right, Bing He? Okay, you're in Leeds in the UK. Very nice. All right, everybody. Well, speaking of mountains and snow, I'm going to go put on my hiking boots and go tromping around up there, up here. So, Bing He says he took Home Depot. Excellent. And Bing He, what's the name of that symbol that you got out of yesterday? I always forget that symbol. You had that 4% gain on there. Jackson says, to help my own trading, I have made it my own personal rule to take these V1, V2 trades with 2 minimum daily downside, sideways above value, or minimum 2 days down, higher low. Makes my life just simpler. Excellent. Excellent. Okay. Jesse, okay, you took VTR. Okay, we talked about that one. That's right. So that's the new one. But the other ones, I forgot some of them. PDD. That's right. Had that one. That was sweet. And Twitter. Nice going, Jess. Nice rules. I mean, nice entries and nice positions. BRFS, what did that do today? Okay, so it was up a little bit more, but you definitely got the meat of it. Excellent trading, guys. Excellent, excellent. All right, so Bing He, thank you, sir. I hope you have a good day in Singapore. Christopher Hitchin, hope you have a good evening in the UK, in Leeds, and thank you so much for coming by. Jesse, excellent positions that you've taken there. So glad to see those working out for you. Have a good day out there. Be safe with your job. Jackson, good to see you, my friend. I'm really glad that you have made these rules. It's easier to live when you have rules. It's easier to trade when you have rules, and those are good rules to have. Proud of you, bud. Wayne K, thank you, my friend. And nice job on your Chipotle trade. Very, very good. Thanks for coming back. Appreciate. Always nice to see you. Frank, good to see you, sir. Appreciate you being here and hope to see you again. Mount Doji, good to see you, my friend. Hope you have a good rest of your day. And keep in touch. Let me know what's going on with your trades. Gamer Squad, good to see you too. We're neighbors. You're in Denver, I'm in Utah, so hope everything is going well in Denver. Stay warm with all the snow. Evan, good to see you. Glad that ATVI is working out for you. Let's see here. We have a man solo. Thank you for coming by. Always nice to see you, and I hope that helped on the GDX V2. But me personally, I thought the silver V2 looked better, but we shall see, right? And Steve Burns, thank you for coming by, my friend. Always great to see you. And thanks for educating me about the Mandalorian on Disney Plus and the Baby Yoda. And nice job on your Amazon and on the Etsy trade. And Murik, good to see you. Thank you, my friend. Hope you have a good evening in Norway. Christopher Uhl, really great to see you. Thank you for coming by. Hope you come back. Kurt, good to see you, my friend. Looking forward to our call. Excellent trade on Chipotle. Man, love to see you guys having these nice trades. Really, really makes me happy. And Liam Doe, that's right, he snuck in at the top up there. And so thank you for coming by. I think this is the first time I've seen Liam, so I hope you keep coming back. And Toby, nice to see you. Toby comes by every once in a while. And Evan, oh, we said goodbye to Evan, but we'll say goodbye twice to Evan. You skipped both, the man solo did. Okay, everybody, have a good rest of your day. Go out, do something nice for somebody today, would you? Just a little something. It really might improve their day, and then they may improve somebody else's day, and so forth and so on, right? So it's important. We need it in this world. So anyway, hope to see you all tomorrow in the last hour. Take care, everybody. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.